Hello everyone, welcome to Making Sense of 2026 CareShield Life Updates with Money Owl. I'm Albert, and today with me I have my master trainer Felicia, and we thought of putting together this short video just to share with you what are some of these announcements that were made. More importantly, how will they affect you in your planning. So first part of the video, I will be going through a quick refresher just to bring us through what is CareShield Life, right? And later part, we'll also have some questions from the community that we have picked up, and we thought of answering them so that it can help you better your understanding as well. Without further ado, right, just a quick disclaimer as well that today's video, this presentation is really just for information, right? We do not know your current financial situation and your current insurance portfolio as well. So please do speak to a licensed financial advisor or insurance agent before taking any action, especially when it comes to some of these recommendations, whether or not you should be looking at supplement plans, which we'll discuss together later, right? Now, just a quick refresher, we do have quite a number of national scheme insurance, right, in Singapore that most of us we have. Now, looking at this table, it tells us that we do have a base, a MediShield Life, and that covers us for our hospitalization. So inpatient expenses, right? And that's a very basic cover that we have that helps us to take care of the hospitalization costs in subsidized hospital wards, so B2 and C class wards, right? And CareShield Life is in between, right, where it provides us with a monthly cash payout instead, right? Today, if we are severely disabled, so you might be wondering what severe disability means. Later on, we'll share a little bit more on that. So the last part of our national scheme you will see on this table is basically our retirement income. So our retirement income is formed by a base called CPF Life. CPF Life essentially is our base for our retirement income needs. So how CPF Life comes into this whole picture, later on we'll also share, and it's something for you to consider as well. So what is CareShield Life? CareShield Life is essentially a national insurance scheme to provide us with a very basic protection today if we are unable to perform certain activities of daily living. So what are activities of daily living? You can see on the screen now. These 6 activities of daily living, if at some point you require help throughout performing these activities of daily living, then you will be deemed severely disabled. So if you are unable to perform 3 out of 6 of these activities of daily living, then you will qualify for a payout from CareShield Life as well. So that's what CareShield Life is about. Now, then you might be asking, right, is it necessary? Do I need long-term care insurance? Do I need CareShield Life? The statistics are here, right? So MOH, they have this statistic that 1 in 2 of us, healthy Singaporeans at the age of 65, which is the time that most people are going into their retirement, they will become severely disabled, so unable to do the 3 out of 6 activities of daily living. So this is, I think, a worrying statistic. And on the right of the screen, you will see that a lot of times we forget that in a disability, it's not just a one-off incident. It stretches for many, many years. The median duration of your disability, right, is at least a 4-year period. However, there's also a small group of people who become disabled. They spend more than 10 years in disability. And there's also this very big problem that we are living longer, and more often there's going to be this risk that we carry this disability into the later years of our life, and that is why there is this bit of long-term care insurance and CareShield Life to help us pay for our long-term caregiving needs. So how does everything fit into the retirement? You saw it just now in our earlier slide that we have our MediShield Life, we have the CareShield Life, we also have a CPF Life. So this is how it fits, right? So in our retirement, this is what we aim to have. We want to have a fully paid property, a roof over our head. We also want to have money to help us take care of our long-term medical and caregiving expenses. And lastly, we also need to have cash, right? We also need to have retirement income to help us take care of our day-to-day basic living expenses, right? So in order for us to have a more comprehensive view, that is where you can see CareShield Life actually comes in for the long-term care portion, especially in our retirement years. Now, Example here that I have a friend, right? Sally, she actually suffered from a stroke, and as a result, she's unable to perform 3 out of 6 activities of daily living. So she's deemed severely disabled. Now, today, assuming you have some insurance, right? I think it's a good time for us to relook at our insurance portfolio as well. Different types of insurance, they serve different needs, right? So at the top, you will have your basic MediShield Life. All of us have that, right? So remember, it's the hospitalization insurance, right? And some of us, we may have integrated shield plan, right? That is the private insurance top up that you can buy to enhance your MediShield Life cover for class B1 ward and above in a government hospital or even a private hospital. Now, second layer of insurance that you may have would include your critical illness insurance. Now, there are many types of critical illness insurance, but we'll not be going into detail. The key that we want to take note is that our critical illness insurance is a complement to our integrated shield plan and MediShield Life, because not all our healthcare expenses can be covered by the integrated shield plan and MediShield Life. So that's where this critical illness insurance comes in to bridge the gap. Now, the difference between the critical illness insurance and CareShield Life is that the critical illness insurance usually pays out one lump sum, right? So it can be a few $100,000, one lump sum, and that's it. Once off, twice off, or 3 times, depending on the type of critical illness insurance you have. But for CareShield Life, it is a monthly payout, right? Monthly payout to help you sustain the cost of caregiving when you suffer a severe disability. So how this comes in, right? Later on, we'll discuss this together. Now, let me just quickly go on to some of these changes that was announced recently, right? So what are these CareShield Life changes? Now, for those who are not aware, CareShield Life was actually introduced a few years back, right? And when they introduced it, they had a 5-year period for review, right? To make sure that this scheme is still relevant in current circumstances. So this is the 5th year, 2025, right? So the review has been completed. CareShield Life Council has submitted their recommendations. The government has accepted as well. MOH has then now announced these changes. So the first change is that the payouts, right? The most important part of having this insurance, the payouts, instead of increasing at 2% per year, right? The payouts now will increase more at 4% per year. So numbers, how does it look like? So by 2030, right, someone who is going to be getting about $730 will now expect about $800 per month for a claim if they are severely disabled. So that's the first change, increasing at a higher rate. Now, the second change is because the benefits are increasing, the premiums will also need to be enough to sustain this rise as well. So likewise, premiums also will be increasing at 4% per annum. Likewise, in terms of numbers, right, you are looking at about $500 to $650 per person if you are a middle age, right? But this amount is before any transitional support and subsidy. One key thing to note is that the premiums for CareShield Life will end at 67 years old. Now, the third change that was announced is because of this increase in premium, there is also going to be government support that will be rolled out, especially to help those lower middle income people, right? And to expand the eligibility criteria for those who need more support. The key thing over here to note is to help to moderate the increase of premiums for all the affected policy owners. So I think we can have some confidence in that it will not be a sudden change. It will be a gradual increase in these premiums that we need to pay as well. And fourthly, from January of 2026, the rules will also be tightened. The rules of claim will also be tightened for those who are born 1979 or earlier. Only those with pre-existing disability may join. So I think this is also a call out, especially for those of us who are born before 1979, who have been on the fence, right? Because this group of us, we would have ElderShield previously. we may be looking at whether or not to consider to switch over to CareShield Life. Maybe previously you may have terminated the ElderShield policy. Right? So there are also some considerations. So this is a call out to start to consider again whether or not you should join CareShield Life, because the criteria to join will be more stringent. And the fifth update would be streamlining. I think this is one learning that the CareShield Life Council came up with, is that the current claim procedure is quite all over the place, right? So they are trying to make everything easier, right? Streamlining, making the assessments easier as well, and reducing the amount of paperwork to improve the experience for the claimants and also the caregivers. Now, with that, right, that is the brief update of the key changes that were announced, a quick reminder and a refresher of what CareShield Life is about. Now, I would like to invite my colleague Felicia in for the next part of this video, where we will discuss some of these questions from the community, and perhaps that would be something interesting for you to take note as well. Hi, Felicia. Welcome to today's video.
Hi, Albert, and hello, everyone.
Yeah, so we have put together some questions from our community, and today we'll have Felicia to help us answer some of these questions. Now, the first question we see is that what are some of the actual costs of caregiving, and how will they look like when we have a 4% annual inflation rate put onto the cost of caregiving?
Okay, how much is the actual cost of caregiving? It really depends. All right, it will depend on what type of care you prefer and the level of care you require. So according to MOH, let's say a community care means like a daycare, it will cost around 2007, which will include not just the medical services, but also like consumables and the cost of caregiver. And if you're staying in a nursing home who requires maximum care, then the cost is around about 4,009. So these numbers are before subsidy. How much do you actually pay would then depends again on what is the level of subsidy and support that you can get. So if you are able to qualify for the maximum subsidy, which is 80% for community care and 75% for nursing home, bear in mind that these subsidies are given based on the means testing. So for lower income families, they will be able to qualify for higher subsidies. And together with all other grants, then the net amount you probably need to pay is about 1,009 for community care and 3,007 for nursing home. Now, if CareShield Life, starting from next year, were to pay $689, that means the out-of-pocket cost is 110, or for nursing home is 510, which is not a lot. And how much do you actually really need? And on the cost of care, like what I mentioned, it depends on what type of care. So I extracted some numbers from AIC website for the 3 different types of care. So for home-based care, meaning you are being taken care of at home, so there's a wide range of between $800 to $3,000, again, depending on the severity, the amount of care, whether do you need to hire a helper or are you being taken care of by a family member? So all this will affect how much it will cost. And of course, the community care over here is just the cost of the care center itself. So you will exclude like transport and the cost of caregiver and of course the nursing home. Now then we measure this across with how much the CareShield Life payout is going to be. So assuming that it starts off at 689. So clearly you can see that if without subsidy, there will be a huge out-of-pocket cost. And even with subsidies, unless you can get the maximum, then you can lower then the out-of-pocket cost is lower. But if you don't qualify for a very high subsidy, then this out-of-pocket cost can also be a financial strain to you and your family members. So what you can do, one option is that you can consider a private supplement plan, which is offered by Income, Singlife, and Great Eastern. And for some of us who may still have the ElderShield plan, then your payout is only $600. It's only $400 for 6 years. Now, so the second part of the question is that how do you project how much would the cost be in future for you? Then you can actually scan the QR code and go into our Money Hour and make use of our financial calculator to help you project based on the cost today, say for example 2007. And then the years that you think you may need this care, say 10 years. So if we project, say, the inflation to be, say, 2% or 4%, then how much will be the future cost? So that will give you an idea of how much you actually will need in future. Now, then the second question?
Yeah. So second question is about whether or not CareShield Life is going to be enough, and what should the consideration be if we are looking at a supplement. Because just now, Felicia, you mentioned the basic payout about $689, right? Comparing to the cost of care may not be enough. So how should we compare these options?
Okay, so for the first part of the question, would CareShield Life coverage on its own be enough? Then CareShield Life coverage alone may not fully cover the cost. As you saw in the example just now, even with a 80% maximum subsidy, there will still be a small amount of out of pocket that you need to come up with. And if you have lower subsidy, then of course this amount will even be higher. So that means, in other words, CareShield Life alone will not be able to fully cover it. So now is that if you want to consider CareShield supplement programs, then how should you go about choosing one that's suitable for you? Okay, there are 3 providers. So we have Income, Great Eastern, and Sing Life. So when you want to compare the products, then you have to look at the features. Don't just purely compare on premium. So you look at the features and you see what are the features that is important to you. Because for some plans, they may start the payout when you have moderate disability, like just unable to do 1 or 2 ADLs. One thing common across these 3 plans is that their payout is for life as well. And among the other differences, among this plan, one of it will be a premium. Okay, so most of them, the premium is level. That means when, unlike CareShield Life, the premium increases 4% every year, right? For the supplement plan, other than Sing Life, the rest of the plans, their premiums are level. For Sing Life, they have an option. They have 2 plans, whether you want to choose the one where the premium is level or you want to choose where the premium escalates. So of course, when with escalating premium, it also means that the payout is escalate. So then you have to weigh the difference, which are the ones that is suitable for you. Because when preparing for long-term care costs, we really do not know when we need it, right? So one idea is that you can consider, because we can actually use up to $600 from our MediSave to pay for this supplement plan, then you can actually go and check. So based on your current age, with $600, how much of coverage can you purchase? And other than Income, the other 2 providers, the payout is on top of what you will receive from the CareShield Life. So you can actually scan the QR code to compare these providers, their plans, and then you choose one that is suitable, that meets your needs.
So another question would be, right, other than CareShield Life, the supplement plans, right, are there any other funding sources that we can consider to bridge this gap?
Okay, so just now you already covered this. All right, so that means other than CareShield Life, then you have your CPF Life, right, which actually gives you a monthly cash. So the purpose of CPF Life is meant to pay for your monthly daily expenses, okay, your daily expenses, as well as your retirement lifestyle. Now, you think about it, let's say if you're going to be staying in a nursing home or you're going to the daycare, then basically you wouldn't be spending on other things. So you can actually use this money, use this payout from a CPF Life, help to pay for your care needs as well. And so if you want to have more, you can consider topping up your CPF so that you will have more when you retire, or you can actually transfer your CPF from your OA to your SA or RA if you don't need your OA for your housing anymore. So when you have more CPF savings, so this becomes cash when you retire, which you can actually use it to supplement your care needs if it's required. So we just have to bear in mind that our MediSave, when you stop work, your MediSave will also stop growing. Okay, and your MediSave is not just used to pay for your CareShield Life or your MediShield Life premium. Okay, you also need it for other medical expenses.
I think that's a great point. Rather than just depending on the insurance, where there are certain claim criteria that need to be fulfilled. For CPF Life, we don't need to be sick, but we still get the money and we decide how we will want to use the money. So I think that's a great point there.
Exactly.
The other question that we have is that with the CareShield Life premium set to increase, right, a lot of our community, they are thinking whether the premiums will also increase for the supplement plans itself, the private insurance. What do you think, Felicia?
It's quite most certain that private insurance company, they will also increase the premium simply due to inflation. and also claim experience. So of course, the quantum of increase will then varies from company to company.
Okay. And finally, I think this would be one key question that a lot of the community, especially for those of us who are in the group where you had ElderShield before, you were on the fence. Some of you, your friends have converted, and then you are trying to weigh the pros and cons. Perhaps Felicia, you can share more. What are the considerations today? If I have ElderShield or previously I have opted out from ElderShield, right? What are some of these considerations? Whether should I join CareShield Life or not?
Oh, yes. Thank you, Albert. I'm definitely in this group who is still holding on to an ElderShield. Okay. So should you actually switch and join CareShield Life? I think it really depends. Depending on what does it depend on? Okay. First of all, it depends on what is your ElderShield plan? Okay, because previously there is an ElderShield 300, then after that there's an ElderShield 400. So because ElderShield 400, ElderShield plan is optional. So then the question is whether do you actually opt out of ElderShield? Okay, and then number two is that do you actually join ElderShield at 40 years old or not? So all these conditions, different situations, you will be paying different premium. So just a very broad comparison between ElderShield and CareShield Life. One thing is the same is that they will cover you for life. Okay, for ElderShield, you only need to pay premium up to age 65, and the premium is level. You don't have it will also increase. Whereas for CareShield Life, you have to pay until 67. And depending on the age when you join CareShield Life, if you join at a later age, then you have to pay at least 10 years of premium. So in other words, let's say if you're already, say, for example, 65, that means you have to pay premium to 74. So paying until age 67 is only for people on a younger age. All right. And then, of course, CareShield Life cannot opt out. ElderShield pays out the same way as CareShield Life when you are severely disabled. That means not able to perform 3 out of the 6 activities of daily living. So whether should you switch or not, then like what I mentioned, these are the people that will be affected. If you are only on ElderShield, okay, then you have been automatically enrolled since 2021 onto CareShield Life. So you may not already have your ElderShield. Yeah, actually already on CareShield Life. So for people who are born before 79, all right, then those who didn't switch over, all right, you can actually choose to join CareShield Life. And of course, let's say if you already have if you're still on ElderShield and you actually have ElderShield supplement, they may want to compare the total benefits you receive from your ElderShield Plus supplements, whether is it better or more than the CareShield Life payout. If it's better, then you actually don't need to switch because the premium for CareShield Life will be more expensive than your ElderShield supplement. And let's say if you're already opted out, that means you do not have any ElderShield or any long-term care insurance now, then one option is that you can choose to join CareShield Life if you are not severely disabled, or you can also choose to self-insure depending on your age. Because without any ElderShield, the premium can be quite high. So this information is from MOH. So like what I mentioned, it all depends on your current situation, whether do you have an ElderShield or not. And if you have, is it a 300 or is it a 400? Do you join ElderShield at 40 or do you join ElderShield later? Because if you have joined ElderShield right at the beginning at age 40, then you only need to pay a base premium, which will increase every year by 4%. But let's say if you're on those lower plan like ElderShield 300 or you join ElderShield at a later age after 40, then other than a base premium, you also have to pay a catch-up component. So in total, this amount can be quite substantial. The only way for you to find out or to decide is to actually scan the QR code, go into the CareShield Life premium checker, because this is you have to use a SingPass to log in, and then straight away this CareShield Life premium checker will actually let you know what is the premium that you're paying. So as I mentioned, you have to strike a balance between what you want, what you need, and long-term affordability, because you will need your Medisave for other medical expenses as well.
think that's a very good point. Thank you, Felicia, for sharing some of these answers to what our community is asking. So I think in summary, it's very important for us to take note. The risk of severe disability is increasing. We are also living longer. However, money is just one part of the equation, right? I think it's important for us to be able to balance our healthcare expectations together with our affordability, especially the long-term affordability when we are in retirement, no longer having an active working income, right? So having that flexibility, I think, is more important, especially in our retirement. While there are systems in place, right, we also need to be mindful, right? How do we utilize these systems to the best of our situation? So I think planning for your insurance, right, you should not wait any longer. Take this the recent update as a good opportunity for you to review your insurance needs, right? With that, we've come to the end of today's video sharing of the CareShield Life updates of 2026. For more information, do follow Money on social media and especially on our Instagram, where we push out information like this from time to time, and take action of your own financial planning and insurance planning today. Thank you and see you.
Thank you.